the stock market. And there were people out there saying that the stock market was going to go to 30,000. Some said, it was going to go to 100,000. And lately, well, we haven't hit 30, we haven't hit 100, and it seems like the market is volatile. It's, bouncing up and coming down quite a bit. What is your take on why we've never hit 30 or 100? Do you think we'll ever get there? Or do you think the market is getting ready to decline even further?
Dave, yeah, this is a very interesting topic here, and there's a lot of psychological implications that go on with the market. But of course, the Fed is behind this in so many ways. And, we got to the levels that we got to because of this new normal of monetary printing, ultra low interest rates. And are we going to see 30,000 and ultimately $100,000 Dow Jones, let's say? I think that will happen. I think it's going to be more of a breakdown of the financial system. And when we do start seeing inflation set into uncontrollable degrees. And that's when we will see stocks be reflected and, the purchasing power of the dollar go down in relation to stocks. So I do think that's eventually coming. But right now, especially if you look at what we saw yesterday in the stock market, Caterpillar had decent earnings, but then said, I don't know if this is going to last into the future much longer. Everyone's worried about peak earnings right now. And that small statement sent the Dow Jones down 500 points. It really reminded me of a boy going down a hill and picking up so much speed and hitting a little rock that causes him to go off the handlebars. And that's where I feel things are with the economy right now. Things are so out of control, and they're doing everything they can to stay on this bike. And I'm not sure how much longer that can go on for.
The Fed is looking to continually push rates even higher. And if they continually push rates higher, how is this going to affect, let's say, the real estate market, the auto loan market, the student loan market? Because we see right now with real estate, as they push interest rates up just a little bit and the rate for mortgages goes up, we see that mortgage applications, they're declining because it pushes a lot of people out of the market. Now, the question is, does the Fed see this? Today, real estate is not as strong. Yes, prices have gone up, but there's still a lot of people underwater. And if they keep raising the rates, what does this do to the real estate market and the student loan and the auto loan and the economy?
Yeah, it's a house of cards. And that's exactly what you're describing there. The Fed has managed to raise rates 6 times since 2015. And, bankers are charging more, but banks still pay savers nothing. And this is unprecedented. It's the new normal. And even Lloyd Blankfein, the CEO of Goldman Sachs, was interviewed by CNBC. Goldman Sachs, of course, a company that thrives off of the ongoing propaganda and manipulation. He even said he's cautiously optimistic, and he even called what we have today a new normal of ultra low interest rates. You might recall we went to 3% on the 10-year Treasury and at the end of 2013 and 2014 for a brief period of time, and then before that. But we're at debt levels that we haven't seen. I mean, the U.S. is at $21 trillion. We're on our way to $22 trillion. We might even see that before the end of this year, which will be unprecedented, going through $2 trillion thresholds in 1 year. And, this is a domino effect that I absolutely see as concerning. And that's why it's impossible to ring a bell at the absolute bottom or at the absolute top of any market, and is the Dow Jones going to go to 30,000 before we see a major correction? It's very hard to say, but that's why you need to be positioned correctly. You need to own your gold. You need to have some cash, because if we do see a massive sell-off, it's possible the dollar gets stronger in the meantime. We've seen that before. But like I said before, I mean, we are out of control. Volatility is going to be a really normal thing. And I believe the unwinding of all of the monetary policies are going to be problematic going forward. And a lot of companies are worried about that. You have the government doing everything they can to prop up the economy. Donald Trump lowered taxes. They're pulling back regulations, while the Fed is trying to do the opposite. They're trying to slow it down. And what kind of dichotomy is that? And it's just such a problematic setup. The foundation of what this is all set up with is not normal. And it is kind of a crazy thing because the US has benefited from having essentially no competition. They operate in this monopoly, this vacuum, and they do whatever they want to do. They do what they want with the dollar, and people can't really opt out. But you have Russia, you have China, you have these other countries positioning themselves in such a way where there will be a way to opt out. And maybe the purchasing power and the flow of the economic might will move to some of these other regions. And I do see that happening, especially as the US disparages things like gold and promotes reckless monetary policy. And this is coming to a breaking point. And it's going to be hard to say when that happens, but you want to know that it's going to happen and be able to position yourself accordingly.
Now, you mentioned debt, and the IMF came out, and so did the biz. They warn that there's too much global debt around the world, and they want governments of developed nations to basically push what I call austerity, where they want them to cut their budgets. They want to impose austerity on the people. It seems like the central bankers, they're very worried about the amount of debt that is being added, just like you said previously. Why are they so worried about the debt levels getting too high?
You know, Dave, honestly, to get away from even like the conspiratorial type of underpinnings of the market, I think the elites in power, they like things to be normal. And that's what they want. They want, the people to be, doing their thing, paying their taxes, and they want order. And so, so things getting too reckless on their end is a threat to their normalcy. I mean, you look at the flattening yield curve. Banks don't profit as much when the yields flatten because they invest in the short-term treasuries, and then they flip it on the long mortgages and the 10-year bonds and things like that. And they make money that way. They make money on the spreads. And the flattening yield curve is a threat to that. Of course, the flattening yield curve is more of a free market sign that the manipulation isn't working. And so I think they worry that what is normal might not be so normal going forward, especially as things start to come unraveled and the floor falls out from under the system that they've created.
Now, we've been in this fiat system for over 40 years now, and we know from history that these systems, well, they don't last that long. And we see that China, they launched the Petro-Yuan futures market, and this pretty much goes up against the Petrodollar. And there's a lot of countries looking at this, wanting to deal in the Petro-Yuan. They want to get out of the dollar. We see China's making deals, bilateral trade deals with many countries. Russia's doing the same. Venezuela's looking at this. Iran's looking at this. Syria's looking at this. I mean, there's just a whole slew of countries looking to move away from the dollar. Does this mean that the dollar is at its end game right now?
I definitely see that happening, and especially on the war front, and you see the U.S. going after Syria here, and anytime someone threatens to get away from the petrodollar, the U.S. gets involved with that scenario, tries to take down the dictator or the leader. And it's going to be interesting because it's not a black and white situation, because the U.S. could, in theory, go and try to destroy its enemy and hurt them before they hurt the U.S. for that matter, and destroy the competition before the competition takes them over. So I'm not 100% confident how this will play out, and I'm sure the U.S. is going to do what they can to maintain its hegemonic power over the dollar. But it's very interesting to see how other countries are positioning themselves. They're buying gold, and by the way, I think gold is a very, very timely investment, especially in 2018, here in the $1,300 range. This is a time to smart investors are accumulating gold at this time. And by the way, we just released our #1 pick at crushthestreet.com for gold mining at crushthestreet.com/gold. Just wanted to throw that out there for everybody. But as far as the investment goes, I mean, China understands it, India understands it, Russia understands it, and the U.S. disparages gold, and they prop up the dollar, the petrodollar. And I think, unfortunately, so many people are getting tired of gold because gold has gone through this very long bear market. We had a small blip in 2016, which almost teased everybody, only to have 2017 where gold went below $1,300 once again, and then to just kind of stagnate where we are now. But I believe that gold is a great buy at the moment, and we're going to need much higher numbers to really confirm for the investment community that gold is in the bull market channel. But I think you're very safe buying here at the $1,300 mark. And, when things really start to set up, I think we could see a Bitcoin style frenzy set into gold. And, I think that's what Russia and China are preparing for. The US as a monopoly will eventually not be a monopoly, and the purchasing power will flow from the west to the east. And I think that's going to happen.
I think you're right. I think China and Russia, they've been positioning themselves and taking advantage of this very low gold price because they know once the dollar dies and the manipulation is stopped and everything starts to move away from the West, everything's going to be revalued. And they know if, they're holding, 2,000 tons or 1,800 tons of gold and they purchased it at 1,000 or 1,100 or whatever they did, they know that this is going to be worth a lot more than what they purchased it for. And I think they're positioning themselves. And we discussed certain topics before the interview where a lot of people believe that, real estate is the place to be because they see it going up. The stock market is a place to be because it's going up. And back in prior to 2008, the same thing occurred. Everyone thought, oh, let's go into real estate because the corporate media, everyone's telling us this is the place to go. It's going up and it feels good. Same thing with the stock market, where a lot of people, sat on the sidelines with gold and things like that. And when everything, came crashing down, the opposite occurred. Everyone was in on those investments. Those dropped, and then gold started to rise, and people didn't know what to do. And I think we're heading towards the same exact thing, especially with gold and cryptocurrencies, because right now everyone, especially the IMF, the Fed, the central banks, they're telling us that cryptocurrencies is not a place to be. And to me, once they start saying that, that is the place that you should be looking at.
Yeah, no, that's an interesting thing. And same thing with gold, right? They're
Yes.
disparage gold. The Federal Reserve disparages gold. But cryptocurrency was such a beautiful thing. And Bitcoin in particular is something special. It's going to be almost impossible to duplicate what Bitcoin was able to do by not having a founder and having this very decentralized platform, this wealth storage vehicle, this ability to transfer money worldwide, however you want to do it, completely opt out of the system, take it wherever you want on a paper wallet. I mean, that's a very, very beautiful thing. I know a lot of people are concerned about it. If you can't hold it, you don't own it, things like that. But I mean, you really have to open your mind to what is happening. Even Milton Friedman in the 90s, you might have seen this, Dave. He indirectly predicted Bitcoin or the concept of it. He talked about how the world needs internet money, something that the government can't tax. Now, in theory, in this normalcy, environment, the government can tax it. But ultimately, in a reset type of scenario, you can get your Bitcoin, jump on an airplane, and go somewhere else. And that's the reality of it. But in this environment where things are normal, people live in their homes, they have their social security cards, all this stuff, people are reporting their Bitcoin gains, and it is what it is. But to the extent that if the system really got out of control, the extent that compliance meets regulation, I don't think the enforcement of the Federal Reserve or the federal government, will be enough to cause people to comply with the rules. People can opt out. And that's what's so positive, and that's what's so amazing about Bitcoin here. And people who are taking this opportunity to enter Bitcoin as we've seen it come down, I think it's very strategic. Maybe we did get a little far out in front, but look, if Bitcoin even gets close to where gold is in terms of its market cap. Gold's market cap is $8 trillion. I think Bitcoin needs to go over $400,000 a coin just to meet that. And of course, gold, I believe, should be worth a lot more than $8 trillion. So there's a lot of room in this pie for when this wealth transfer takes place. I know a lot of people are saying Bitcoin is the new gold. I don't think that's going to happen. Like going back to central banks and governments, I mean, just wait till governments start to put their own money into something like Bitcoin and saving some of their reserves in cryptocurrency. That's coming. I know it sounds far-fetched, but I mean, companies are starting to do it. And why won't governments, especially once they start having more and more confidence in it? 2017 turned cryptocurrencies into an asset class. And without 2017, without $20,000 Bitcoin, we wouldn't be talking about it the way we are today. Only the pioneers, only the people with the true vision understood the potential of it. But now it's being understood that this is the future, and I'm very optimistic on where I think Bitcoin can go.
Now, the central banks, the IMF, the Fed, they're especially Christine Lagarde was out there saying that we need regulation. We need to have regulation because terrorists use it. They're using it for money laundering. Criminals use it. The Fed is out there saying that there's no way in the world that Bitcoin or any type of cryptocurrency is going to replace their fiat cash system. It just doesn't stand up to what a currency is. Do you agree with the central banks that criminals use this and this could never be a currency?
I think that it can be a currency. Bitcoin as it is now can't be used as a currency because it does need to develop to be able to scale. And I believe that is coming. But Bitcoin as a wealth storage vehicle is very viable. In gold, for instance, backing paper dollars with gold. I mean, that's a viable option. And so we could definitely see that with something like Bitcoin. I can see that happening as well. But as far as this demonizing of cryptocurrencies, it's them, disparaging it. It's competition to the current system. And of course, you're going to have bad actors and people inside of the space that are using it. But that's also because of how overbearing the system is on people, that people do have to sidestep the government to be able to operate. I mean, I can't even move my money from bank to bank without incurring lots of fees and waiting, hours and hours to transfer my funds. And this is the beauty of having a decentralized currency. And the thing about what makes Bitcoin is so special is, just like Milton Friedman pointed out, a house, for instance, is something that's easily controlled. The government knows that the house is there. It can't be moved. It's physical. They can drive up to it and, seize it from you. So it's so easy to tax. But Bitcoin is almost impossible to tax. Again, in theory, it's very regulated. But to the extent that enforcement can actually be enforced, and if the people are actually going to comply, that's the balance. I don't think people ultimately have to comply in the event that the system that is in place implodes. And I think that's where things are headed.
Well, let me ask you this. If we move to a cryptocurrency, maybe it's not going to be Bitcoin, maybe it'll be some other coin that pops up or whatever, and we move away from the Federal Reserve dollar here in the United States, and people don't use the dollar for transactions. So let's say Amazon now takes this crypto coin. You go into stores, they take the crypto coin, you get paid in the crypto coin. Do we need the central bank anymore? And will we be taxed on anything because it's not a Federal Reserve note?
That's just it, right? I mean, you go back in history, there was tons of currencies in the US, and each individual bank was issuing, banknotes backed by what was actually in the bank. So this concept that we need some central bank controlling our money is not true. I mean, we trade things all the time, that isn't necessarily with our money. I mean, kids in school are trading cards and trading value. And, you might trade a service. So it's just a tool. Money is just a tool. But the problem with it And the implications is that you can spend 30 years of your working career, and that might represent, I don't know what that would add up to, hundreds of thousands of hours, or, a million hours of your hard-earned time, and wrap it up into something that you don't know if it's going to retain all of that effort that you put in over the last 30 years. That's the real problem, is where can I store all of this energy, all of this, talent, all of these ideas that I've put into, that I need to store somewhere to deploy at a later time. And that is the question. And is that the US dollar, something that the Federal Reserve can print into oblivion? I mean, we've seen what happened in Venezuela. We've seen what happened in Argentina as they, shut down the bank. We've seen what happened in the US, where the dollar was backed by gold. They confiscate all the gold and they devalue the currency by 70%. That really is a horrible thing for people who've, stored their life savings and all those hours and all that effort and energy into something to ultimately see all that purchasing power go away. And that's why I believe in finite assets. And Bitcoin is a finite asset that I believe is going to be around for many, many years. And it has the first mover advantage. It has something special that is almost impossible to duplicate again. It was the first one, but it was also the one that, got it right in so many ways. So I don't think Bitcoin's going to go anywhere. You have some of the smartest minds in the world putting their thought and their talent into Bitcoin to develop it. So, nothing is certain, but neither is the U.S. dollar. So you have to diversify this, because the implications is, what do you do with your savings? And that's what everyone's scratching their head about, and that's why I really like gold. To a certain degree, I like strategically positioned real estate, because that is also finite. Being by the beach somewhere, or being in an area that's, has a lot of demand. I know there's a lot of problems within the economy, which can derail some of these prices, but at least it's finite. At least you have the weather going for you, and the population is growing. And so there's some other ways to diversify your money, and I believe it's prudent to do that.
Now, we've been talking about technology with cryptocurrency, and we see that the unemployment rate, and you'll see where I'm going with this, is down to 4.1%, where they're saying that we're almost near full employment. But when we look out into the real, job scenario in the U.S., a lot of these jobs are part-time jobs, and a lot of the jobs have been replaced with technology, with AI. Where do you see the future going with jobs in the United States? Because we've seen it in the past with factories. There used to be a lot of factory workers, and slowly they were replaced with robots and things like that, and they lost their jobs. Now we have AI, we have other technologies, we have cryptocurrency. Where do you see everything going moving forward with jobs?
Yeah, I mean, this is huge implication, and it especially pertains to where we spend our time focusing. What do we do with our education? What do we teach our kids? What's going to be relevant in the future as technology advances at the speed of Moore's law, or faster than the speed of Moore's law? This is huge. And honestly, I believe, because of the way things are changing and developing, I believe 50% of the jobs in the US currently are at risk of being replaced by AI. And I know that sounds like a large number, but keep in mind, not every job is going to be replaced, and I did say at risk of being replaced. But things are changing here. Elon Musk is working on driverless cars, and he believes that there's going to be a 10x reduction of accidents. Sophia from Hanson Robotics, this is a robot, and she was talking at a conference in Portugal in front of 60,000 engineers and scientists, and she joked, and everyone, laughed under their breath, nervously. But she said, I'm going to replace your job. She told a big auditorium and said, I am going to replace your job. And the thing about where AI is going is it's machine learning. And this is replicating what a human brain does, as opposed to something that's pre-programmed. This is replicating, and now these machines are inferring. And AlphaGo uh, is a is a robot, and it learned to play the Chinese game Go. And it's similar to checkers, but there's more combinations than there are atoms in the world for how to play this game. So there's no possible way to pre-program every move. And this game was able to learn how to play, this robot was able to learn how to play the game and beat the smartest human at this game. And this is going to have a lot of implications going forward. And yes, I believe this is going to be a major threat for a lot of jobs. Now, I'm optimistic that a lot of these jobs are going to be replaced, aside from the economic implosion, all things being equal. I think that there's going to be a lot of indirect jobs created as a result of this. And I'll give you an example. Textile versus hand weaving in the 19th century. Machines now produced 50 times more than one person could, which resulted in 98% job displacement. But the results were goods were 4 times cheaper and, a lot cheaper, and 4 times more jobs were created in the same sector. And look at auto versus horse and buggies. Sure, you had a lot of jobs that were destroyed in the horse-related sector, but automobiles grew, and you had, travel, more hotels. You had fast food now, drive-throughs and things that came about indirectly because of technology. So I would say that although I think it's going to be a massive game changer and it's going to be almost impossible to compete with these robots, I think there's going to be some positives that come out of it. And that's where it is. And, it's such a mind-blowing thing to wrap your mind around because the internet is this decentralized platform that is basically the sum of all historic human knowledge going back to the beginning of time. And humans can access it, for what, a $20 a month internet connection. But computers can infer and have access to all of this information in real time as it develops. And if you have these computers that are advancing and learning, simultaneously, I mean, the implications of this are absolutely huge. And I think it's going to be a very big thing going forward. And again, you really need to stay in front of this and, maybe position yourselves in more creative type sectors and areas that cannot be as easily duplicated or replaced by a robot.
So moving forward with the economy, with the global debt, with cryptocurrencies, with AI, with China launching the petro-yuan, the One Belt, One Road, and the dollar declining rapidly and countries moving away from the dollar, where do you think we are headed with all this? Do you think the United States is going to be bringing back all the manufacturing? Do you think the United States will still have the reserve currency? Or do you think we're going to see major changes moving forward?
I think major changes are coming. I think the debt implosion could happen on a dime. It's one of those things that people are so comfortable. They think this is just a slow moving boat in the water. But I think that this is something that could change very quickly, this turn on a dime. And I think even the stock market's volatility is a sign of that. It's going to be such a propaganda. It's been a propaganda for the major central bankers and the people in power. And when they lose control of the stock market, I think a lot of the trickle-down effects will go into the economy. I think the U.S. dollar is at major risk of being replaced ultimately. And I don't know if it's going to happen right away. But I know that China and Russia, they're preparing for it. China has a larger economy than the U.S., depending on what metric you use. I know GDP by mid 2020s or 2030, they're expecting the Chinese GDP to surpass the U.S. I know they've surpassed the U.S. in terms of economic purchasing power. And as this starts to happen, the U.S. does not have as much leverage around the world. And, we're seeing that. I mean, I know right now the countries are trying to work together. They're trying to keep things together. China is showing some goodwill, wanting to do business with the U.S. They're open for business. But as things start to fall apart, every country is going to want to do what's best for themselves. And, I think China's positioning themselves specifically to take this over. I mean, look at what they went into debt for. The U.S. went into debt to bomb countries all around the world, and the Middle East, and we're spending all of this money, and yeah, we're racking up debt. And China is doing the same thing, except they're spending their money building out their infrastructure. Look at the U.S., the major U.S. cities that are crumbling and falling apart and bursting at the seams. You go to China, there's tons of cities that haven't even been filled up yet. I mean, that's years and years and years of growth for that country to continue to develop. I mean, it's possible we start seeing Americans, packing up and going to China eventually to go get jobs in some of these ghost cities, because that's where the opportunity is, and it's not necessarily here anymore. So I definitely see a major shift from west to the east as things go forward.
Kenneth, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Dave, thank you so much for having me on your show. It's been a pleasure. If people want to learn more about what I do and where to find it, they can go to crushthestreet.com. They can sign up for our free newsletter. Dave, once again, thanks for having me on the show.